Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, May 18th, 2020. I am Frank Ochoa, aka PivotBoss, and as we look at the ES here in the daily time frame, you'll notice that the ES is up nearly 3% already after pulling back and bouncing significantly here already. We talked about this solid rejection day here and how it was a great buying opportunity. We got in off the lows there and rode it higher that day, and then on the pullback, I mentioned any pullback toward this zone here could provide a buying opportunity for not only a 1 but perhaps a 5-day move higher to new highs. And already we're seeing that nice move come to fruition. Over the last hour, the market has rallied on news that there are positive early stage results for a coronavirus vaccine. But again, that's positive early stage results. And so the market's seeing a lift on that right now. But overall, we've had this pullback nailed here with a bounce off of 2780 and that rejection off the 2760s. And so far, it's hit every target here on the way up. Now we have to see how does the market fare here once price tests the upper edge of the previous week and the previous month's edge. On the upside, 29.47 to 29.65. So that's going to be important here to seek. And also, can the market maintain acceptance above the previous month's close on any pullback over the next day or two? And can the market even hold these gains? Because the last time we popped these highs, we fell back. The last time we popped up here, we fell back, and now we're here again. So 29.20 is going to be an early key level to watch. Can the market build acceptance at these highs, or do we fall back? All right, let's take a look here at the NQ. Again, the NQ was another one here where we had as a great buy opportunity on any pullback. We actually had a 3-day pullback nailed for a move back into this previous month's close price. So we nailed the pullback zone and the zone, the target zone where it would get. And then from there, we also mentioned how bullish every pullback has been on a 3-day range basis. The pullbacks have been perfect for buying opportunities. So again, we were able to get in off the lows here and get in off the lows here ahead of this move. And now, again, we're looking for a push to new highs. Anytime you have a pullback, you get a push to new highs. You get a pullback, a push to highs. So somewhere between 9,300 and 9,500 could be the next zone above, and then perhaps another pullback again. So again, this market has been very nicely trending higher. Pullbacks have been honored. One thing to keep an eye on is whenever price rejects this high, or should it reject this high, it may lead to a quick swing back again. So right now trending up until proven otherwise, and keep an eye on the previous month's high price here, that blue line. Any pullback to that zone could still be a buying opportunity over the next 1 to 3 days, as long as price remains above 9,100. All right, let's take a look now at crude oil. Crude has had a tremendous rally here. We marked this as a narrow 7-day range when all was said and done. It was a narrow 8-day range as well, but we've had expansion here. 26s was the level we were coiling around, and we finally took it bid on Thursday. I mentioned to our traders in the trading room that 26 was finally taken bid, and we may see a move from this low. We could project higher about 9.5 points and get our target, and so far we're very close to getting that move here, as this range is about 7.5 points right now. So we're about 2 points off of reaching those highs, so about 34s, but we've had a significant expansion. We talked about that narrow 7, 6, 5, 8-day range as it was developing, and finally got the breakout here, and you can see the energy that has been released. The PivotBoss Advanced ADR indicator here helped us quantify that range, as it quantified that compression and gave us the idea that expansion could be ahead. And then we got the early indication that 9.5 points would be about where we see that move expand to if we got that breakout. And again, we have about 7 days to get that range. And so after only seeing 3 days of expansion, we are 2 points shy of seeing that range. So very, very solid breakout move. I wanted to explain that a little bit more there. The one thing that's very interesting about this chart is that it had been trending down this entire time, and the breakout has occurred at the previous month's midpoint. It has broken trend. It may have broken the downward bias that we've seen. It has also taken value bid here, and so any pullback into that zone could still be a buy, and we may begin to make a move back toward 40, or at least these highs at 35. So right now we have broken trend, and whenever you take the previous month's close bid, you work back toward the previous month's mid. By taking that bid, you now go back to the previous month's high. 35 is the next key target above. 35.18 is the previous month's high. That's going to be the next key target here. Any pullback over the next day could still offer an opportunity to get up toward that target. Lastly, taking a look at gold futures here. You'll notice with gold futures, this one here has shown a rejection off the highs here. And again, as the market reaches and stretches toward recent highs, this one too is also rejecting here after reaching and stretching toward highs. We mentioned before that this move right here at 1700, if we can get above 1715, which is basically this blue line right here, we could likely get to 1740 and perhaps into the 1760 to 1780 zone. And that's exactly what we've done. We've put in a high at 1775.80 now. A bit of a rejection tail is developing, and if you look at the intraday time frame, whether it's a 60-minute chart, a 15-minute time frame, or even a 1-minute chart, you'll see a trading range that has developed from 1765, really 1766 half, up to 1775, and it has broken to the downside. And by breaking to the downside now, it opens up the potential to see more pullback ahead. The tail looks like this now. By the end of the day, we may look something more like this, or perhaps a bit more bearish, something more like this. So again, how's this going to look if we can't get back above 1765? So 1760 half is where we currently are. If we bounce up towards 1765 and can't get back above that zone, that could suggest more weakness ahead, with a likely push below 1750. If we do reject the upper edge of this range, we know where the bottom is. It's 1765. That's basically these lows, 1770. That zone right there. So 1770 to 1775 would be the lower edge of this target zone. But again, you want to take profits ahead. So we'll see what happens today. Can price get above 1765? If not, we could be looking at another rotation down within the trading range. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.